We are covering hedge funds and private equity, two key alternative investments you'll see on the Series 65 exam. These products are unregistered securities, meaning they are not available to the general public and are sold through private placements. The exam requires you to know exactly who can invest. The primary qualification is being an accredited investor. For an individual, this means having a net worth of at least $1 million, excluding the value of their primary residence, or having an annual income of $200,000 or $300,000 for joint income with a spouse. For the last 2 years with the expectation of the same this year. A common exam trap involves a question where a client's net worth includes their home equity. You must remember to subtract the value of the primary residence to determine if they qualify. The exam also recognizes certain professional licenses, including the Series 65 itself, as a path to accredited investor status. Beyond the entry requirements, the test will focus heavily on the unique risks and characteristics of these investments, primarily their lack of liquidity. This illiquidity is often enforced through a lockup period, which is a contractual agreement that prevents investors from selling their shares for a specified, often multi-year period. If an exam question presents a client who may need access to their funds in the short term, a hedge fund or private equity investment is almost certainly an unsuitable recommendation. Another critical concept is the aggressive use of leverage, or borrowed money, to amplify returns. While leverage can increase gains, the exam will test your understanding that it also magnifies losses, creating a significant risk factor that requires clear disclosure. Another major topic is the high fee structure, commonly known as the 2 and 20 model. This consists of a 2% annual management fee based on assets and a 20% performance fee on any profits the fund generates. The Series 65 exam will often contrast this high-cost structure with the lower expenses of traditional mutual funds, framing it as a key disadvantage for investors. You'll also need to understand specific fund structures. A fund of funds is a hedge fund that invests in a portfolio of other hedge funds. The exam will test you on its main drawback: multiple layers of fees. The investor pays fees to the fund of funds manager, who in turn pays fees to the managers of the underlying funds, compounding the cost. Private equity is a broad category of funds that invest in privately held companies. A specific type you must know is venture capital, which focuses on providing financing to early-stage startups. The exam will emphasize the extremely high-risk nature of venture capital, as most startup companies fail. For a memorable shortcut, remember that clients need an ALL pass for these alternative investments. They are for A accredited investors only, have L limited liquidity, and use L lots of leverage and fees. Understanding these 3 pillars is key to correctly answering suitability and risk-based questions on your exam. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.